What's going on, you guys? This is Aaron from Departures Capital and welcome to the video. In this video, we're talking all about what's going on Wall Street as we are seeing Apple rally yet again. The markets are in the green. We're hitting all-time highs for the indexes, and gold and silver not getting as much love. Now, I want to talk about those two metals, of course, and I think that one is better than the other, especially in this environment right now, which I'll reveal just a little bit later on in the video, and some real key technical levels to watch in terms of resistance and some support, along with a lot of new and awesome, exciting information that I put together for you guys. So anyways, let's get straight into it. It's Monday. We're back here, guys, and this is your full daily recap. These are your market minutes, and the last thing I'm going to say is if you do support me in the channel and all the videos, then don't forget to explode that like button, along with if you are a new viewer to the channel, you appreciate constant daily updates on the markets, you want to learn more about investing, and you love a flow of new and exciting companies every single day, then don't forget to cash that subscribe button and ring the market bell for notifications. And let's get straight into this video. So I hope everyone had a fantastic weekend. I sure did. Finally had a chance to relax. Probably had a little bit too much good food, and we're back here. So we're back. We need our tea, we need our coffee, and we need to get straight to comment of the day. So do you think the USD will go higher next week? If so, will this drive gold and silver down? And that comes from Boatski Gaming. So tough call right now. Thank you for reminding me, and I will pull up the DXY real quick, and we will take a look at that right after comment of the day. Right now it's flat, just over 93, 93.25. So dollar strength, I definitely think will bring gold and silver down. Whether we're going to get it for now, it's kind of hard to say. So next comment of the day goes to Jack Hall. Nice to see you back, Jack. Great job, Doc. Camera makes a huge difference. Great investment, but it's still all about the content and insight for me. So glad to see some nice comments. You got a couple comments. One from Ned, nice camera effects, looking professional, great content as always. Next comment of the day goes to Medi. Better than expected. Every darn news is better than expected for Wall Street. It's the Fed's July meeting minutes that are all messed up. The PMs totally this week. Next week, there is more better than expected crap coming for this, I reckon. The Fed has some summer meeting that can be critical for the metals, and the DXY showed some strength today after weakening of the euro. Expect a lot of volatility, and yes, better than expected dollar strength. We're getting a period of consolidation right now. You know, this bull market for the metals right now, it's not just going to be, you know, a straight shoot up, in my opinion, not like we're seeing with tech. Tech just seems to be invincible right now. It's pretty wild. We're going to be talking all about tech in just 2 seconds. TRP. This is a really interesting comment. Retirement homes down, you say. Well, most kids won't take care of their parents, but rather toss them into homes, so those retirement homes have a income stream guarantee. I might just buy some, but I'm too stupid to know what ticker is a retirement home. And I was just probably talking about retirement homes on the day. If you did know and follow my channel, which you might, TRP. I'm actually long-term bullish on the retirement homes, and that's one sector of the real estate market. Although it's gotten beat up due to this whole global illness and, you know, that negative stigma around retirement homes being, you know, one of the hardest hit areas with this whole global illness, which they have been. I definitely see value in them in the long term. And you're totally right. Most kids won't take care of their parents, and they'd rather put them into a retirement home. So I agree with that. Definitely worth taking a look at. And when I make a few more videos this week on different topics, probably on some dividend stocks, I want to include some interesting retirement homes that I found. So last comment of the day goes to Solar Newbie. Where's your mini Canadian flag on your desk? It's not about the American money to join your club. And it's never been all about the American money to join my club. It's been about, you know, just having a channel that caters towards the North American markets. So yes, I'd love every one of you guys to join my private group, but I still represent as a Canadian. So we'll find a different way to represent Canada. Don't worry. We'll find a different way. Anyways, let's get into the news and the rest of the content for this great recap. So guys, let's take a quick look at the dollar index. And the dollar index has been bouncing around 92, 93 recently. And so far on this recent little run up, we haven't in fact been able to make higher highs. So right now it's looking kind of neutral. The dollar could potentially be losing some steam. We'll see if we can get higher highs. But for now, I would love to see the dollar continue to fall. I'm not sure if we'll get that, but keep your eyes on the dollar around 93. We'll see if we get a further rebound. Apple is in the green yet again today, up 1.27%, hitting over $500 per share. I believe this is a fresh 52-week high. The stock opened at actually $515, and that is a all-time high, 52-week high. So the tech run continues. S&P 500, Nasdaq at all-time highs. On global illness treatment, so the S&P 500 and the Nasdaq scaled new highs on Monday as gain in Apple shares and U.S. approval for the emergency use of blood plasma in patients lifted treatment hopes and spurred bets of quicker recovery. So are we going to get it, guys? It's almost like the market is searching for any type of news just to, push the markets higher. This rally has been nothing short of impressive. But that's what happens when you have infinite amounts of money. We are seeing the S&P 500 above 34,000 points now, and the rally just continues. I think that the markets are going to tick higher until we get volatility around the elections. We're not going to talk about who I think is going to win. I don't really have an opinion on that. Politics, not my ball game, not an area that I want to talk about on YouTube. So guys, let's take a look at gold. And gold is down actually another almost $10 per ounce, down 0.5% to 1937. And that key level to watch, or at least those two key levels to watch for me, 1920, the 2011 previous all-time high, and 1900, which I believe is more of a psychological level. Right now, I think gold is in a period of consolidation, and I don't think it's going to be an easy run, at least for the next little while, especially with the markets being so optimistic and the dollar showing some strength. So take this with a grain of salt. We are getting a pullback for sure. Things are not as bullish as they were. Long-term factors, of course, remain intact, though. So much monetary stimulus, fiscal stimulus. Another long-term factor that I think hasn't really set in was the fact that Buffett started to buy gold stocks. And if any other big investors start to get into the market as well, I think that that will be a further catalyst for investors to reconsider gold. But for now, gold's looking pretty bearish, to be honest, guys. Now let's talk about that one commodity that I wanted to talk about and I think is in a much better position than gold, and that is in fact silver. Because, if the market continues to run, which it probably will, if Tesla continues to run, if Apple continues to run, tech, silver is an industrial metal. Silver does get some support from tech. And if we look at the charts here, just, simply flipping from silver to gold, the charts look much more bullish for silver, and silver has in fact held on to more of its gains than gold has. Gold is more of a hedge. Gold is more of a defensive metal. Silver is a precious metal, defensive metal, but it benefits from a positive economic environment, whereas gold benefits from political uncertainty and not necessarily the best economic environment. So I think silver is now going to catch that industrial demand / economic uptick in economic activity. With all of the tech stocks doing so well, the demand for silver should increase as well. I mean, we know it's going to renewable energy, electric vehicles. There's so many different factors. But read a very interesting article on silver, which I'm going to bring up for you guys. But right now, if you ask me, which metal am I more bullish on? I'm going to say silver. I'm more bullish on silver right now, especially with the markets running, gold threatening a bit of a pullback. And silver is pulling back a little bit too. But let's dive into this article. And the last thing I wanted to say, I wanted to give you guys a quick update on our private group, which is in fact just $10 a month or $100 a year. And we have posted some really awesome weekend content, including a new trade. So one new mining stock that I did buy, and then an exclusive video. That is our third video of the week, and it has included a few new and exciting companies that were viewer requests. So if you're part of our private Facebook group, you can request different things, different stocks for me to take a look at. Anyways, I wanted to take a look at this silver article. It's a pretty good article. Hi-Ho Silver, the white metal's wild ride might not be over yet, written by Andy Hecht. So I want to point out a few very important things as he talks about the key levels of support and resistance to watch. So the technical break to the upside in the silver market was a significant event at just under $27 per ounce at the end of last week. The price was closer to the high than the low for 2020, and silver's technical position continues to be bullish. So I wanted to point that out for all of my people right now doubting the rally, saying, oh, silver is not going straight up anymore. What's going on? Are we back in a bear market? And I don't think that that's the case. I also don't think that things just go straight up all the time. So this is a very interesting article written specifically for investing.com. But I wanted to talk about his levels to watch on the upside. Technical support now stands at the breakout level at $21.09. On the upside, above the recent peak at just below $30 per ounce, the first level to watch is the October 2012 high at $35.44. The next level is $37.48, and the February 2012 high at $44.27. On the upside, above the recent peak at just below $30 per ounce, the first level to watch is the October 2012 high at $35.44 per ounce. The next level is at $37.48, the February 2012 high, and $44.27, the August 2011 apex in the silver market. So the March 2011 high at $49.82 is another target, but the 1980 all-time peak at $50.36 could be the ultimate goal for the precious metal. And I do think in this environment, we should at least get record highs, all-time highs for the metal. And that record high is in fact $50.36. Getting above $50 per ounce would indicate almost 100% upside from these levels. He still thinks that silver could be heading for a new record high. This is a very lengthy article. Feel free to take a look at that. But I just wanted to point out those levels. And let's take a quick look at the silver charts to see. So there we see those 2012 highs, $35, $44, and then $49. So definitely some key levels to watch. Like I said, guys, though, in terms of support for silver going down, I do think right around $26.50 is a key level to watch, and I do believe that we are testing that. So it's going to be nice. It's going to be very interesting to see if silver can stay within this trading range. I would really like to see it stay within this trading range and at least hold on to $26.50, because right now we're trading at $26.52. So fingers crossed, hope we can hold on to that. I've got a few quick headlines. That's going to be it for the headlines, and then straight on to the charts. So a couple bearish articles now, and we're bound to see it happen. Silver and gold not looking good, so take a look at the Kitco news. Jackson Hole expect big fundamental shifts, impacts on the dollar and gold. So all eyes on the Jackson Hole meeting. We're not going to read this article, but I wanted to point that out. Hedge funds hesitant to place bullish new bets on gold and silver, and for the right reasons. I think at these levels, gold did have its run to over 2,000. Now I think we're in a period of, pulling back a little bit. A lot of investors are saying, wait for a little bit more of a pullback in gold and silver before going long again. And I definitely think that, there will be opportunities in the future to accumulate some gold stocks and then once again go long. And I do think that, we will have further gains down the road. But now the market's kind of slowing down a little bit. A few more quick articles. Iron ore prices have hit multi-year highs as demand soars on infrastructure investments. So the commodity sector in general has been doing pretty good, and that's why I wanted to point out this headline. I think we're seeing just a rebound overall in the commodity sector. And then last but not least, TikTok sues the US government over the Trump ban. So TikTok is suing the US government. We'll see how far that goes, guys. Anyways, it's time to take a look at the charts, and that will be it for the video. So let's see what's moving on the markets in terms of the MJ sector. 48 North, High Tide, and Curaleaf, three biggest gainers. What is losing on the day? EGF, Theramed, Sundial, and Meta. So not too much going on for the MJ sector today. Let's take a look at the gold and silver sector. And we are seeing a decent pullback. African Gold Group, Turmalina, and Kootenay Silver, three biggest losers. Turmalina is down 7%. It's definitely one I'm taking a look at around $1.30. Alright guys, let's take a look at dividend stocks. In terms of the dividend stocks, we are seeing Brookfield Infrastructure Partners in the green, which is quite ironic because we just talked about how iron ore prices are hitting record highs, and it seems to be that infrastructure is getting some love today. So that's some very good news. Now let's take a look at some tech stocks. In terms of the tech sector, we are in fact seeing EGF Theramed biggest loser, but Alibaba hitting fresh 52-week highs up 3.76%. So Chinese stocks still getting some love despite all the political tensions. And last but not least, we are seeing Tesla down 2%, but yet again hitting 52-week highs. And Carnival, Boeing, and Air Canada, three biggest gainers. So guys, that's it for the video. Thank you so much for watching. Let me know your opinion in the comments. Any comments welcome. And we're out of here. Always remember, Departures Capital is for information, education, and entertainment purposes only. Don't buy or sell a stock because you heard it on here. Buy or sell a stock because you've done your research, you've done your thorough due diligence, and you're making your own personal investment decisions for yourself. This video is not financial advice. We'll see you guys in our next video.